So today I've got a really new exciting feature for my website to announce, and that is the How to Invest HQ portfolio. And what this is going to be is a free, publicly available portfolio where I am taking real positions with my own money and showing those plans basically to everyone on the site and my YouTube channel. I'm going to show you how I plan to grow the portfolio over time as I add money to it. I'm going to give you my initial stock purchase and the rationale behind that purpose, and discuss the plans for the future of this portfolio. So what this is a small stock portfolio, and it's going to be publicly available for free at any time on my website. And what I plan to do is add $500 to $1,000 a month to the portfolio and then buy a new stock. So I'm going to do this until I have around 5 stocks, and then I'm going to add to these positions over time. And again, this will be all publicly available and documented on my website and YouTube channel. And this is meant to show a home-based investor how to not only pick stocks, but how to invest over time. And what I mean by that is, I feel like a lot of home investors just save up a bunch of money. They have a bunch of money in their savings account. They're like, well, I don't know what to do with this. And they'll just, oh, I should buy stock. So they'll go out and buy stock, and that's it. And then they'll go back to saving money in their savings account until something similar happens. So this is not really a good plan. What I want to show is that you can save in a stock market account. You can add to this account every month and purchase new stock. And that's sort of the purpose of this video. We're using small amounts of money, something that, if you're following the advice of my site on how to make a little bit of side income online, if you work an hour a day or a weekend day a month, coming up with $500 to put into the stock market each month is a reality. So I didn't want to use a irrational sum. Although maybe in the future I'll increase that. Maybe next year we'll bump it up a little bit. But for this year, I think this will be a good experiment. And I'm going to put out monthly, quarterly, and annual updates. The monthly reports will tell how much I put in and what I'm buying. The quarterly updates will talk about, how the stocks did over the quarter, but more of a focus on, what the plan is for the next quarter and how well, how good I feel about all the stocks I'm currently holding. So, I'm mostly planning on stocks that I'm looking to be long on for a long period of time. But if something changes and I don't like the stock anymore or I want to move into something else, the quarterly report will be a good place to discuss that. And finally, the annual update will be more about the performance of the portfolio and what the plans are for the next year. And I will say, follow this at your own risk. That's why we're using a small amount of money. I'm not a professional investment advisor. This is not financial advice. If you decide to follow along, operate under the assumption that the fund could lose all its money. This is not for your retirement account. This is not for your emergency fund. This is just for excess savings that it wouldn't hurt you too bad if for some reason they lost out. Obviously, I'm not planning on that, but who knows what could happen. So for the first month, I purchased 5 shares of LinkedIn at $200.66. So I put in a couple extra dollars over the 1,000 just because I wanted, the even 5 shares. It was so close, so I threw in a couple extra bucks. And the stock's already up to $210 today at opening, but really that means nothing. Even though it's gained 5%, that means, or 4% and change, the goal here is long-term growth. The stock's up 5%, but we haven't made that 5% until we actually sell the stock and get that money in our account, because tomorrow it might be back down to 200. By the end of the day, it might be back down to 200. Next week, it might be 190. We're not trading on the day-to-day, or even the month-to-month, or even the quarter-to-quarter. I'm hoping that I don't want LinkedIn to go from $200 a day to $200 to $210 in a day. I want it to go from 200 to 300 in a year, or 200 to 400 in 5 years. That's the goal. We're looking for big gains over a long period of time. And I chose LinkedIn for a few reasons. One, I think it's a great value. These stocks right now, even though the earnings per share is through the roof, these stocks don't trade on earnings per share. They trade on revenue and revenue growth. And right now, the amount you're paying for $1 of revenue per share of LinkedIn is extremely low, I think. It's just a tad more than Facebook, but LinkedIn's much smaller than Facebook and has a lot more room to grow. Facebook's market cap is $130 billion. LinkedIn is 20 some billion. It's likely to remain larger than LinkedIn. There's definitely room for LinkedIn to grow, and that sort of can be seen in its extremely fast revenue growth. Even though it's starting to slow in this case means still generating 10% quarter over quarter growth. We're talking about $350 million 2 quarters ago, $390 million last quarter. And compared to other networks, like Twitter is more than twice the amount of revenue per share. And while Twitter, or not twice, it's many times more. I think it's like 3 or 4 times. I think when I put that 40 in there, I was kind of projecting Twitter's next quarter into that calculation. So Twitter is a lot more expensive than LinkedIn, and I think LinkedIn has the potential to be the more profitable network. I think LinkedIn is also great because it's the most stable network. It's not going anywhere because people need to use it. They don't have an option anymore. If you're looking for a job in tech, you have to have a LinkedIn account. And I think in 5 years, that'll be the case for any sort of white-collar job. I think the last sort of holdout will be the federal government. Probably won't need a LinkedIn profile to get a government job anytime soon, but if you don't live in D.C. or Denver, then, you're going to need a LinkedIn profile. So I hope this video was helpful for you, and this new plan is helpful for you. And the last thing I wanted to touch on is the February 2014 and beyond plans, and what I'll be doing next month is adding another $1,000 and purchasing a different stock. I have a short list of stocks that I'm long on, and I'll purchase whichever one feels like it is best price come next month. This isn't 100% accurate, but I picked LinkedIn first just because it slid from $240 to $200 in a month with no real rationale. The company's still the same company. I don't care what any bank's concerns are or any, investors' concerns are. I think that more people use LinkedIn over time and more people are advertising on LinkedIn over time. That's the bottom line. And I think that, it's got a lot of room to grow. So I'm not too worried about, the day-to-day or month-to-month profitability. I'm looking at the year-to-year here. And this next move will be made public in a blog post, which will be displayed on my homepage. I'll also update the portfolio page, and I'll have another accompanying YouTube video. So if you're wanting to follow along, all this information will be available to you next month. And I'll try to get this up on February 1st. If that's a weekend day, I haven't checked the calendar yet. It'll be the next day in the month, whatever that day happens to be. So I hope this video is helpful. I hope this series is helpful. I encourage you to, even if you're not ready to invest yet, at least follow along and just sort of check out the theory and see how it does over the next year. Hoping at the end of the year, we'll be able to pull in some good returns and have a nice little portfolio going.